Welcome back. It's time now for the Board on Wall Street. Top investors watching your money. Joining me now is Payne Capital Management President Ryan Payne. Also with us is Marcus Lemonis this morning. Great to see you. Thank you for joining the conversation.
Great to be here, Maria.
All right, we want to talk about this market here. Futures starting the day in uncharted territory again as the melt-up continues. Dow Industrials now at 47,628, up another 84 this morning. The Nasdaq's up another 41 after all three major indices finished higher yesterday, with investors regaining confidence on the path of rate cuts and digital asset strength. Bitcoin, by the way, jumping this morning after falling below 85,000 earlier this week. It is back up to above 92,000 right now. Look at crypto higher across the board. And there's this I want to get your take on. U.S. money markets hitting a milestone yesterday. $8 trillion in money market accounts right now for the first time in history, Ryan. Crane data says that the total was up $105 billion for the week through Monday. I spoke all about this with the Securities and Exchange Commission chairman at the New York Stock Exchange yesterday, so we'll have the rest of that interview coming up. But oftentimes in the past, you've talked about all that money in money market accounts.
Yes.
To say that money eventually flows to the stock market, and it's one of the reasons you're so bullish. So what did you think when you saw that number in money market accounts go above $8 trillion yesterday?
Well, thanks for remembering that, by the way. Yeah, I think it's remarkable because what you're having right now is everyone's scrounging for yield. So if you've been sitting like a deposit account, you know the Fed's going to cut rates. You're like, where can I get some more yield? Now, I'll remind everybody, 2 summers ago, the money market fund was at 5%. And every Wall Street expert was telling you, well, cash is a position now. Well, it's actually not, because it continues to go lower and lower. And I think, look, we know the Fed's probably going to cut next week. And if Kevin Hassett becomes the Fed chair, which it's like, I don't know, 78% odds at this point, based on the poly market, he said he's going to cut like right away. So that could be 2 cuts next summer. Your money market fund goes to under 3%. And my philosophy is nothing creates more envy than your neighbor getting rich. So if you see everyone's making all this money in the stock market, now you're getting like under 3% on your money market fund. We know where that money's going. Eventually it's going to the stock market, and this melt up you're talking about at some point is going to be a more magnificent melt up, in my opinion.
It's a great point to make, but I mean, the whole idea that all this money is in money market accounts, doesn't that in and of itself tell you that people are scared? They're saying, look, I don't want to put my money in the market. I'm going to put it in a money market account. And then now we're at $8 trillion.
Because people don't feel as smart as they used to. The AI boom has sort of crowded all this money into one sector, and people don't know what's safe. But what happens with the 10-year Treasury? All these things you're talking about, what does the 10-year Treasury do? Does it drop below 4?
I think it does because of oil prices. Remember, the Fed controls short-term rates, the bond gods control longer-term rates, and it's really about inflation. And the most disinflationary component in my mind, when you look at the one variable that's most important, is oil prices. They're under $60 a barrel. I mean, look, if you look at the globe right now, our output's more than ever. Saudi Arabia's output is more than ever. Venezuelan, output, that's getting to the market. Russian output's getting to the market. So I think if oil prices continue to go lower here, that's very disinflationary. You'll probably see the 10-year, somewhere below 4%. And I think, again, from mortgage rates, that's fantastic. And it's also very, very stimulative to the U.S. economy.
Well, the melt up matters, but it matters if food prices come down and housing booms, and you need the 10-year to come down for housing to boom more than interest rates coming down.
Well, I mean, look at AI stocks. They are higher again, even as we see new competition now coming in with Google and OpenAI and Anthropic coming up with their own ideas for, chips, trying to take market share from NVIDIA. OpenAI's Sam Altman reportedly declared a code red in a company-wide memo this week to improve ChatGPT. It seems especially important after ChatGPT reported an outage yesterday due to, quote, routing misconfigurations. Operations back up this morning. Amazon also wanting to make its own custom chips, saying that it's 4 times as fast as its previous generation at the Amazon chips. Your thoughts, Marcus?
I think everybody wants to do that, particularly Amazon, because commerce is going to ultimately live in the AI universe. And Amazon knows the fastest way to generate more commerce is to be in the middle of that AI piece. Every business knows that.
I mean, this competition from Google was a surprise to me.
It was, and that's actually their 5th iteration of that semiconductor. Their TPUs as opposed to the CPU or the GPCs. I'm getting them all confused now.
It's GPUs versus
TPUs.
Yeah.
Yes, TPUs. So I think the problem here is analysts weren't talking about it yet. If you look at Google, they've been working on this for 5 years. So you have stiff competition. I've said this last week. NVIDIA has like 80% of the market share. Well, in America, companies are looking at that. They want that market share too. We have OpenAI, which is only one of many large language models, makes no money. Everyone says, well, during the dot-com bubble, companies didn't make money, they make money today. Well, one of the largest players in the space is literally losing money right now. So, I think the bottom line here is we don't really know how this is all going to end. Every analyst can tell you they can, but creative destruction, it's always around the corner, and we don't know how it's going to play out. So I think this is why you want to diversify your money. Don't put all your chips into the AI trade because, again, at some point, party's probably going to stop.
Well, I mean, it does feel like we've seen a new direction of this economy with AI. I mean, you look at the backdrop, and we have a strong backdrop. I mean, we got new data on the holiday shopping season. I want to get your take on this. The National Retail Federation says a record 203 million consumers shopped during this 5-day holiday weekend from Thanksgiving through Cyber Monday. Salesforce is estimating Americans spent more than $17 billion online. That was on Cyber Monday alone, Marcus. Your reaction?
Well, I want to be careful here. The number of consumers is one thing. The amount that they spend matters more to me. Credit card data says it was flat to slightly down. So if spending was up, did it go into buy now, pay later? Did it come out of cash? Where did it come from? That's the bigger concern that I have, and I don't want to see people continue to consume and pile on their own debt.
I'll tell you, I mean, when we spoke with Max Levchin the other day, he came in, he's the founder of a firm, Buy Now, Pay Later. He said, no, just because people are buying now, paying later doesn't necessarily mean that they're struggling. I mean, he tried to make the case that this is just another idea to spend money.
Well, it's good for his business to say that. I'll give him that. I think people do feel a little bit stretched.
But why would you buy now, pay later? Yeah.
That's right. Yeah, I put that couch on layaway back in the day. But I think the point here is, well, first off, look, people are relatively, for the most part, employed. We have 4.4% unemployment right now. If you look at debt service to people's actual income, it's the lowest in like 20 years. So people do have money to spend, in my opinion. They will spend. The one economists get wrong all the time is people aren't going to spend money. They probably will, and it'll probably be more than last year. So I'm bullish on the consumer and spending.
All right, we will leave it there. Ryan, great to get your take on all that. Thanks so much, Ryan Payne. Marcus, you're with us all morning. We're so grateful. Thank you for that. Stay with us. We'll be right back.